Good morning, girls. I hope everyone are fine. Are you ready for the next problems that we are going to solve in the new chapter? Take your question bank book, page number 67. I hope you have understood from the previous video. I have given the introduction towards the dissolution of partnership firm. I hope you have understood what you mean by dissolution of partnership firm, how it will be dissolved, how we are going to settle down the accounts, and what are the circumstances, what is the difference between dissolution of partnership and dissolution of partnership firm. These topics we have completed in the introduction video. Now starting with the problems, and I have given the format for you related to realization account, where it is not much clearly shown what are the items that will be appear in the revaluation, sorry, it's realization account. So here with this problem you can clearly understood how we are going to prepare this realization account. Okay, so in this realization account, always the thing is, in realization account we are going to sell all the assets. First thing, we will be knowing what are the assets that we have in the business, and second one, what are the liabilities that we need to clear. Those things first we are going to record it. Okay, first we have to make sure what are the assets having with us, that is with the business, and second part, what are the liabilities that we need to pay back. Okay, these two things first we have to know. After that, we are going for the adjustments. With the adjustment, what are the assets that we are going to sell? That is what realized. Realization means selling out of all your assets. After selling, you will get certain amount which will be transferred to the bank account. And with that bank balance, we are going to clear all the liabilities. Okay. So when we are winding up of the business, it's obviously understood we need to settle all the transactions, all the accounts should be closed. Is it right? Not even a single transaction can be left over. So when we are closing down entire accounts, finally whatever we have with us, we are going to sell those things, and with that amount we are going to clear all the liabilities that the firm has to pay for the outsider. Liabilities means what? To whom the business has to pay back. So we are going to pay back all the liabilities. It should be cleared, and once it is done, then we are going to find what is the remaining amount within the business, whether it is loss or profit. After that, we will take whether it is loss or profit. Those things will be taken to the partner's capital account. Okay, so let's start with the realization account. For the first question, Suvarna and Sunanda are the partners sharing profit and losses equally. Their balance sheet as on 31st March 2018. So balance sheet is given, liabilities are there, and assets are given. Okay, keeping apart, next below that you can see, on the above date the firm was dissolved. The following information is available. See the adjustment. They have given the assets realized. What are the assets to be realized? That means that the assets have been sold. At what price they have sold. Okay, and creditors and bills payable were paid at 5%. So creditors and bills payable, the liabilities also it is cleared, and dissolution expenses amounted to rupees 4,000. What do you mean by this dissolution expenses? Dissolution expenses is nothing but the process for completely winding up of the business. Certain process will be taken place, certain formalities will be completed from the firm. To complete all those formalities, certain expenses will be happening. So those expenses we are going to term as dissolution of, sorry, dissolution expenses. Okay, that those expenses we call it as dissolution expenses. Now getting into the problem, so this is realization account, debit side and credit side. Okay, First at the debit side, I'm just taking all the assets and dropping into the debit side. See here. Okay. Just look into your question. First item is that under the assets, cash at bank. Except cash at bank and PDD, all the remaining assets should be taken in realization account in debit side. This is the first thing that you have to do. Except cash or bank balance on PDD or PBD if it is given. Except these two, you need to take all the assets in the debit side. See, there is a cash at bank 15,000 that I have not taken. The next you have debtors. You need to take at the book value is 55,000. And next we have PDD which we are not going to take it here. And next stock is 40,000. Furniture is 15,000. Machinery is 25,000 and buildings 81,000. These are the assets. And you have profit and loss account. I hope everyone knows where this profit and loss account will be appearing. Please guess where this profit and loss account will be appearing. Where it will be appearing in partners capital account, that you need to share it for partners capital account. So here in this chapter also partners capital account remains same. There is no change in partners capital account, only minute things are changing. Okay, the logically what is the exact things that we are going to do in partners capital account, that is carried out similar. So here all the assets we have written. First you have to write all the assets. That is done. Now we will go with the liabilities. So always liabilities and assets will not be written at the same side, whether both cannot be written in the debit side, both cannot be written in the credit side. So first thing, we are taking all the assets and written in the debit side. Now opposite to that, all the liabilities we need to write it in the credit side. Okay. Now look at the question. What are the liabilities that we have? You have to check it out. Okay, so first we have bills payable, creditors, Sunanda's loan, reserve fund and capitals. Okay, now first thing that I have to write here, PDD is given by provision for bad debts. They have given PBD. I have written fully PBD. Okay, that is 3,000. That is there in your asset side. Now everyone gets doubt how this PDD or PBD has become comes in the credit side, which represents income for the business. Is it right? You are thinking of that. Okay, it's not an income for the business. Here you can see all the debit side increase in assets. Debit side increase in asset value will be debited. Okay, and increase in liability is credited. Sorry, decrease in liability will be credited. So first thing, PBD, how it is an liability. As I told you, only liability should be taken here. Why this PDD or PBD has come to liability side? Now let me clear this point. See, PDD is always calculated on datas. Is it right? So suppose if you are carrying out the business, if you are continuing the business, the PDD, the firm is going to reserve certain money as keeping as a side for the bad debts. It may be out of 10,000 they may get only 9,000, so 1,000 they have kept it as reserve so that sudden losses it can be easily absorbed from the firm. So that is the reason that can be taken place. Okay, so here what happens, we need to see PDD always it is an expense or a loss from the point of business, whereas that is when you are continuing the business. But here what it is happening, here the PDD we need to clear it up. It's become a liability. How it is? It's nobody is going to pay back to you. I mean, you are not supposed to pay back to anyone, but still you are maintaining certain reserves for PDD, that is for the bad debts. So the firm is going to face the loss due to PDD. Always the PDD is a loss for the firm. That means the loss is paid by whom? The firm, the business. So that it is liable from the business side. The business is liable to face that particular loss. So that is the main reason we are taking PBD in the credit side and with this liabilities. Just if they have given PDD in your balance sheet, directly take it this side with the liabilities. That's all you need to do. Don't get more confusion. Just all the assets is written in the debit side except the cash or bank balance. And if there is PBD, only that amount you will be writing in this credit side where all the other liabilities will be written. Okay, don't get much confusion. And next, there is a liability bills payable 10,000, creditors 50,000 is given. Okay. Next, there is Sunanda's loan. So who is Sunanda here? First point, Sunanda is a partner. Is it right? So you are not taking loan from any outside party. The firm is not taking loan from any outside party. So that is a liability. Obviously, the loan is taken from the partner. Internal loan has been taken. So here what happens when internal loan is taken, that is within the partner itself, he has given some money as loan to the business. That particular liability will be directly paid in the bank account. That particular entry will be shown in the bank account. Nowhere else it will be shown here. Okay, suppose if it is a bank loan, if instead of giving Sunanda's loan, if they have given bank loan, that becomes outsiders loan. So that we need to take it here under the liabilities. With all these liabilities, we have to take the bank loan also. If any loan taken by the third party, that is outside person, that particular loan is considered as direct liability to the firm, and that will be written here along with these bills payable and creditors. But here who is giving the loan? Sunanda. Sunanda's loan means Sunanda, she is a partner in the business. So partner's loan directly will be paid off in the bank account. So directly we have to take it in bank account, not in realization account. Okay. And next we have reserve fund. Where does this reserve fund will be appearing? Obviously, it will be appearing in partner's capital account. So we have done with all the assets and we have done with all the liabilities. Now, first thing is done. Whatever it is given in the balance sheet, that we have entered. Now, the second step, we go to the adjustments. Okay, so first adjustment is assets realized. So assets realized means what? When you are selling out all your assets, at what price you are selling, that price is given. So always when you are selling certain things, we have to take it as your cash or your bank balance will be increasing, that will be transferred to bank account. So here by bank account, I'm mentioning in the credit side by bank account. Always under this you have to write all the assets realized. What are the assets realized in the adjustment? Directly you can take. Debtors is 52,000, stock is 39,000, machineries is 24,000, buildings is 75,000 and furniture 13,000. Is it right? These are the assets realized, adjustment is given here. Now just for your clarification, let's clarify whether all the assets have been sold or not. Okay, here you can just see, look here, datas is there. Yeah, here also datas has been sold. Next we have stock. Yes, here also stock is done. Then furniture we have. Yes, furniture is also done. Machineries we have. Machineries also realized. Buildings we have. Buildings also realized. So all the assets have been realized. So once where everything is entered, you can just do all these totaling of these assets realized. Sorry, whatever the assets realized, all this we have to do the totaling. Finally, you put it in the outer column. You will get 2,03,000. This is your assets total realized value. Okay. Now we have cleared with assets adjustments. Now let us go for the liabilities adjustment. That will be written in the opposite side. to bank account. This also goes to bank account only. Through liabilities means we are paying for them. Is it right? So we are paying out of bank money only, we are going to pay them. We have to clear. So here assets, sorry, liabilities, related to liabilities, what the adjustment is there here? Creditors and bills payable were paid at 5% discount. So creditors value is 50,000. Calculate 50 on this 50,000, calculate 5%. You will get 500, which is not shown here. I am not shown any working here. So here you will get 500 as the discount. So 50,000 minus 500, you will get 47,500. 50,000 minus 500, you will get 47,000. Sorry, it's not 5,000. It will be, yeah. Here, creditors is 50,000. On that 50,000, if you calculate 500, sorry, 5%, you will be getting 2,500. That is not shown here, that calculation, because all the percentage calculation you have already learned in the revaluation account in previous chapters. So I am directly taking the amount here. How you got this 47,500? From 50,000. For this 50,000 of creditors, calculate 5%. If you calculate 5%, you will get 2,500. So 50,000 minus 2,500, you will get 47,500. Okay. In the same way, bills payable is also discounted by 5%. Bills payable value is 10,000. Calculate 5% on this 10,000. You will get 500 rupees. So 10,000 minus 500, you will get 9,500. Okay. So that adjustment is done. And next, dissolution expenses amounted rupees 4,000. So dissolution expense is also paid through bank itself. Here you can write two dissolution expenses also, or to bank account. Since it is already written as bank account, you can write realization expenses or dissolution expenses are one and the same. So you'll be writing 4,000 here. Okay, there is a thing. Now we are going to do the balancing figure. Both the side you have to do the total. So in this problem you are getting to you're getting debit side is more and your credit side is less. So from 2000, sorry, 2,77,000 minus with all these four items, 2,03,000, and here it is 60,03,000. From 2,77,000 minus all these, you will get 11,000 as loss on realization account. Loss on realization account, which is transferred to partners capital account. So as usual, how you where you sharing the losses and profits in realization, in the same way you are going to share your losses 11,000 equally. The ratio is equal, so you are going to share 5,500 for each partner. That is the loss on realization account. Now just summarizing this problem, just listen carefully. First thing, you have to take all the assets debit side. Whatever assets is given in the balance sheet, all this will be appearing here except cash and PDD. Okay, or leave those two items and all the assets you have to write it here. And next, in the credit side, take all the liabilities which is there in the liabilities given in the balance sheet except partners loan. Except partners loan, other things you have to take. Reserve fund, profit and loss, and these things will be coming in partners capital account. So we should not take it here. Okay. So here we should take PDD also. PBD or PDD, if anything is given, that is also a loss in the form of, it is the loss paid by the firm. So that is considered as liability only. So we are taking in the liabilities. With the list, with these liabilities, we are taking provision for bad debts also. First thing is done. We have taken all the assets, and this side we have taken all the liabilities. Now second, we will go to the adjustments. So all the adjustments related to assets realized will be coming in the credit side under bank account. All the assets we are going to enter here. Okay. And next, all the liabilities are paid. So opposite to that, all the liabilities should be paid. That will be shown under the bank account itself. So all these liabilities are to be shown here, which are paid. Okay, that is what we have done. So always remember here, see when you take the assets value, the book value of assets adjustment related to these assets will be coming in this direction, opposite direction. See here, all the assets are taken at the book value here. The adjustment related to these assets are taken in the opposite direction. And here all the liabilities are given at the book value. These liabilities are paid in the bank account in this opposite direction. It is just in the form of X. All the book value assets reaches here the, so assets realized comes in the opposite side. Here all the liabilities in the book value comes to the opposite side of the liabilities paid in will be coming here to the bank account. Under bank account you have to write all this. Okay, and you may think why this PDD is not taken here. You are already considered, this is, we are not paying to any person. It is a loss paid by the firm itself. So it is not going to be paid. We have to consider it as a loss, and that is why we are, whatever the amount we have got, with that we are going to deduct this also. No, when we are balancing, we are finding out the balancing figure. Obviously, this will be deducted. Okay, it will be considered. That is why we are, it is written here. We have to consider all the transactions. So here it is not paid for anyone. It's not any outside person is not getting any provision from our side. It is the loss or the liability paid by the firm, internal liability. Okay, so that is why we are not paying, and we are not showing this here in the under this bank account as the liabilities paid. Okay, I hope so you have understood. Let me see how you are taking up this problem. Once you have understood this problem, copy down all these things. Okay, now next we will go to the next partner's capital account and how to prepare the bank account. I am going to teach you. And remember girls, always all the amount which is given in the balance sheet will be appearing only once, and all the adjustments given, it will be appearing twice. Now once it will be appearing in the realization account, it is done. All the adjustments should appear twice. So here all the adjustment has to appear in realization account. Okay, once it is done here, other adjustments will be appearing in the other accounts. Once again it has to appear in one more account, that is it will be appearing in the bank account. Okay, so please remember properly. Since there is no balance sheet in this problem, you may think where does the second time adjustments will be appearing? It will appear in the bank account. It is same as the logics or the concepts are same. That will not change. Okay, now let me go to the next. We will prepare the partner's capital account. Now here is the partner's capital account. Suvarna, Sunanda are the partners. Okay. Now, as usual, we are going to take the capital balances 60,000 and 80,000. And next, there is a reserve fund in the balance sheet. So, reserve fund is around how much it is 15,000. So, 15,000 is shared equally 7,500, 7,500. And there is a profit and loss in asset side. So, when there is asset side, it is given, it represents loss. So, it is 12,000. The 12,000 is also shared equally for the both the partners. And next in realization account you have got loss, 11,000 loss you got, so that we are going to share in the debit side itself, 5,500, 5,500. You can see here we got 11,000 as a loss. That loss we are going to show it here in the partners capital account, 5,500, 5,500. Okay, and next we are going to any other adjustments related to partners is given means you have to show it here. There is no other adjustment related to partners, so we are just moving on to the next one. Just do the totaling both the side. Here credit side is highest, so do the balancing figure. So Suvarna's balance is 67,500 minus this two amount 6,000 and 5,500, you will get the balancing figure 56,000. And again Sunanda's 87,500 minus 6,000 and 5,500. You will get 76,000. These two balances will be carried to bank account. So that is the reason we have to write here to bank account. We are not writing to balance carried down. It will not be carried for the next financial year. It is going to close. So we are going to write to bank account. This amount will be transferred to the bank account. And next we are preparing the bank account. So here to balance brought down, whatever the bank balance is there in the balance sheet, that we have to take in the debit side, 15,000. And all the assets realized, we have to take it in the, we have to take it here 2 lakh 30, sorry, 2 lakh 3,000. So you can see here, you can see here is a total assets realized we have done in the realization account, that we need to take it 2 lakh 3,000 in this bank account. Okay, only these two items will be appearing in the debit side, always in the bank account. And next, all these items we can take it from the realization account only. So here, whatever the assets we have paid, we have taken here. Whatever the assets have been realized, that we have taken here. Is it right? In the same way, whatever the liabilities are paid, that total amount we have to take it. This also we are going to get it in the realization account itself. You can see here all the liabilities paid here, 47,500, 9,500, 4,000. All